In this module, I'm going to share how a high income earner can apply the 30% investment tax credit. So let's say we have a couple that is earning $200,000 a year and their tax liability is $50,000. And they purchase a $100,000 solar system and they get a 30% investment tax credit worth $30,000 at the IRS. Now, they've already paid the IRS $50,000 for the year, and that was their tax liability, and they've already paid that. They could be paying monthly out of their paychecks. They could be making quarterly contributions, but they have paid $50,000 to the IRS. And now they have a solar system that they bought for $100,000, and they have a $30,000 tax credit at the IRS. So that means the IRS says, whoa, you gave us too much money. We're going to pay you back $30,000 for your solar system investment. And that is how it works for high income earners.